Welcome to Lesson 7, Intraday Technical Analysis. So the last time we looked at technical analysis in Lesson 5, we focused on the daily chart and we also took a brief glimpse at the monthly chart. Okay, there's also the weekly chart. So before the market opens, I look at three charts, the daily chart, the weekly chart, and then the monthly chart. Right? What I do, I mark if the price is likely to open around, let's say 14, then I take a look and I see, okay, this pivot is around 12.15. Maybe this could come into play on the day. Then I look at the weekly chart. I look to see, remember we're going to open around 14, so maybe this level at 13.80 might come into play, right? And then we look at the daily chart. So it says, so we look at this level, maybe this level comes into play because it's close by, maybe this one, and maybe this one, right? So this is called macro technical analysis. However, in this lesson, we're going to focus on what is called intraday technical analysis. So any chart that is less than the daily time frame is called an intraday chart. So what you're going to see is an intraday chart has some data points that are not included on the daily chart and the higher time frame charts. Okay, so on the intraday chart, you're going to see this gray shaded area. At least the way that I have mine configured. This is called the post market. So the market officially closes at 4 p.m. Eastern. However, there's a session called the post market session in which you can still buy and sell some stocks right up until 8 p.m. Eastern. This is called the post market. And then there's another, this other gray area section is called the pre market, and this begins at 4 a.m. Eastern Standard Time and runs until 9:30 a.m. Eastern Standard Time. So this is a period in which the period of time that we use, well, most specifically between 9 to 9:30, we use to see which stocks are having unusual price and value action in the pre-market. And so what I have as well is I have my charts configured to show automatically on the intraday chart the high of the prior day, the low of the prior day, the pre-market high, which is the highest price achieved by the stock within this zone here that you see here, the pre-market low, which is the lowest price achieved here, okay. And then I also have on a more granular level to assist with entries and trade planning. I have the previous bar's high, which is so on the 5 minute chart, the last the candle before the one that is currently forming, the high and the low, because those are the references that we use to determine our entry and our stop loss. And I also have the high and the low of the chart of the candle that is currently forming. So sometimes you might be looking to enter a long setup, and then the low of the candle that is currently forming might be lower than the low of the prior candle's low. But we're using the prior candle's high for entry. So these lines kind of help me quickly determine entry price, my stop price, and then the price markers help me to determine my profit targets. All right, guys. So again, we still have the 9, the 20, and the 50 moving average, the Bollinger Bands, and the candlesticks as usual, candlestick charting as usual. So at the period of time we're looking at this, the SPY is gapping up in the pre-market, and you can see the pre-market high is 685.18, and the pre-market low is 683.87. We can also see that the prior day's high is 688.88. The prior day's low 679.17. So and then finally, the pre-market is not so volatile, but we can see the prior candle's high is 685.10, and the prior candle's low is 684.97. The current candle's high is 685.08, and the current candle's low is 685.01. So instead of having to always be going like this and then checking like that, we can just immediately see it on the chart, and then we can quickly input it into our trade planning spreadsheet. So if we were looking to, let's say we were looking to enter the SPY long, then the high of the day would be 685.18. The planned entry price would be a break of the prior candle's high, 685.12, and the stop might be below the current candle's low, or 685, this is 684.99. Okay, so yeah, so there you have it, guys. Just a quick rundown of the intraday charts and how we set it up for the Phoenix Capital VC trading style. Okay, all right. So on the intraday side of things, I look at two charts. First, I look at the 30-minute chart. Okay, so we look to see if the price is uptrending or downtrending, or if it's going sideways on the 30-minute. Generally, if we're looking, if the daily chart is the price is gapping up and looking to go higher on the daily, then we also want to see the 30-minute chart supporting the daily chart. And then finally, our signal time frame, which is the 5-minute chart. So this is the chart that we use to take entries and set our stops and take exits. The 5-minute chart. This is our main chart. This is the chart that you would see in my recap videos on YouTube. This is a signal time frame. Okay, so just the same like the daily chart, we have the candlesticks, we have the 9 moving average, the 20 moving average, and the 50 period moving average. Now, intraday technical analysis is more tricky than macro technical analysis because everything is playing out much faster. On the daily chart, it's one day at a time. You can do your scan and then you can wait until tomorrow and decide if you want to buy and sell. But in intraday, we have to boom make a decision in split seconds. Okay, so now let's look specifically at what our setup is. So remember the last time we looked at PL on the big picture chart. So we looked at PL on the daily chart and we said this is a day that we want to focus on it, which is the 11th of December because it had news, it had high exploding volume, and likely was going to have expanding range, right? Remember, at the start of the day, we have no idea how things are going to pan out. All we know is that the stock meets our criteria from based on our past winners. So here, this stock on this day, this stock set up twice. Okay, so this was the fourth setup right here. So when we're looking to buy a stock, it must be uptrending, meaning the 9 period moving average, like we mentioned before, must be above the 20 and the 20 above the 50, and price must be above all of them. So now our setup occurs when we have a push in the direction of the trend and then a minimum of 2 counter trend candles or pullback candles. So here we have a red candle, then a nice green candle pushing up, and then we have 1, 2, 3 pullback candles. So once we have this, then we start developing our trade plan, right? So we look to see what would be the entry price. So the entry price would be a break of this candle's high at 16.35 with a stop at the candle's low at 1 cent below at 15.99, and then we will be looking for a 72-cent move from here, or something like $17.10 will be our profit target, right? So that was a fourth setup. I actually missed that setup. And then this was the second setup, which actually took live and which I will demonstrate to you later on in the course. So this is what is called a trend continuation setup. So we're looking for stocks that are already moving in an obvious direction. So the daily candle is green. The 30-minute chart is trending up. The 9, 20, and the 50. The 9 is above the 20, the 20 is above the 50 on the 30, and the same on the 5, right? So then we wait for at least 2 pullback candles. In this instance, we have 5 pullback candles. So then we look to enter, we place an order to enter above the high of this candle. We'll stop at the low of this candle, right? And then we let the chart play out. Remember, at this point in time, we have no idea what's going to happen. All we know is that this setup has, in the long run, if we only trade this setup, the winning trades and follow our trade management rules, that is, the winning trades are going to outnumber or overpower the losing trades, right? And by the end of the month, we're going to make a profit, like I showed you in the introduction video. So this is what is called, this is our setup. It is called the trend continuation setup, and we look for this between 9:45 a.m. Eastern and 11:30 a.m. Eastern. We commit 100% our focus towards waiting for the trend continuation setup between this time frame. After 11:30, if we're not holding any open positions, managing any winning trades, then we shut it down and we'll come back tomorrow. Alternatively, if we hit our max daily large stop, right, which is the maximum amount of money that we're willing to lose in a single day, then we also shut it down, even if it's not 11:30 as yet, right? So there you have it, guys. Lesson 7, intraday technical analysis, our setup, which is called the trend continuation setup, and a rough explanation of what is called edge, right? So see you in lesson 8.